Now, David, before the break, you actually ended by saying that you use cash as a form of asset allocation. But I think the question still has to be asked of whether, if we are in a secular bear market, whether you still be able to achieve those kind of returns, and whether equities are a good investment going forward.
It's very difficult to predict the future, Julian, and of course one of our disclaimers is, historical returns should not be relied upon when making your investment decisions. But I'd have to say, just for us at Huang, looking at our historical track record, and I'm not suggesting people go out there and rely on our historical track record, but just looking at our historical track record, and given the fact that over the past 13 years, the Malaysian markets have gone through a lot of ups and downs. We've had so many crises. We've had the global financial crisis. We had 9/11 in 2001. We had SARS, I think, in 2002, 2003. It's not been an easy 13 years, 12 years in the history of Huang. And in spite of that, if you were to look at our flagship equity fund, we've been able to deliver an annualized return of about 16%. Yeah. Some years, of course, the returns are negative or can be quite large negatives, for example, during the global financial crisis. But we've been able to show that when the environment is not right and you're able to preserve your capital, provides you with the ammunition to redeploy into the markets when things stabilize.
Well, admittedly, the trend over the last 10 years or so have been an uptrend, but there are a lot of doomsayers in the market. For instance, the likes of Mark Faber, and to a limited extent also Jim Rogers. They are recommending a cash-only investment, or at best, some investments into commodities or gold. What is your reaction to that?
I think in the world of investments, there'll always be people out there standing on their pulpit box and pounding the table about their views. And credit where credit is due. Some of these guys have been very consistent in their views. The first name you mentioned has been a bear on markets for the longest time, since I've been in the industry. But the reality is you can have a very, very long-term view. In the long term, we're all dead anyway. But I think we have to learn to be able to participate in the present, in the current market conditions that we are being dealt with. Right? And that's our philosophy.
And one of the reasons that are cited by them is the fact that global central banks have been printing money for a few years now. This is unprecedented. It's not happened before. And when the next recession comes, these central banks will not again have the chance, would be left with very little ammunition. So the question is, are we going to enter into another 20-year bear market as a result of the current actions of central banks?
You're right. This period, or this episode of quantitative easing that we've seen being employed by the major central banks in the world is unprecedented. Personally, I think it is a fairly dangerous experiment, the ending of which, the end result, I don't have any strong conviction how it would end. But I suppose the clearest case would be the quantitative easing, or the printing of money that's being conducted by the Federal Reserve. And while there are a lot of naysayers who dispute or are skeptical about the recovery of the US economy, I wouldn't go out there to say that quantitative easing has not worked. The printing of money has not helped to the US economy to recover. In fact, I think given the circumstances that they were facing in the US, I thought, in hindsight, I think that was probably one of the only options, or one of the better options that they took.
What are your recommendations for long-term investments? Whereabout in the world would you put your money right now?
We have an Asian bias, so leaving aside my bias, given the point you highlighted about developed markets, and when I talk about developed markets, I'm referring more to the US. We think that one should invest as though one were investing in a business. And if you were to ask businessmen who invest globally, which are the regions or the markets that they would want to invest in, Asia would definitely feature highly in their plans, because Asia is where the growth is. And it's a combination of many factors, and you've heard this many times before. It's the demographics, the younger population coming through, the urbanization, the rising middle class. All these themes are secular in nature. Cyclically, yes, Asia or ASEAN or emerging markets is out of favor. But I think over the longer term, if you're talking about longer term, these are the themes that would drive returns and would drive economic growth.
Well, what about regions that are outside of Asia but would still be exposed to the same demographic dividends? For instance, Brazil, South Africa, Turkey. What about countries like this? Would you be recommending investments into other emerging markets?
Just from a very broad top-down perspective, yes. I think most of these countries have the same dynamics going in their favor. But again, when you distill it down to the individual regions or the individual markets, then there are a myriad of other factors that one needs to consider. But yes, as a broad brush strategy, I'd say Asia, emerging markets is probably where a global type investor would still want to increase their exposure to.